I'm Robert Michaud. I'm the Chief Investment Officer and one of the partners at New Frontier Advisors. We're a research, investment advisory, and also a technology company that was really founded on this idea of a better way of optimizing portfolios, how to optimize and have well-diversified portfolios for an uncertain future. And so this is a broadly applicable theory that can really impact the way people invest. And so what we have done is we've built a variety of risk-targeted portfolios that really span many different asset classes and do an effective job of diversifying risk and capturing return in portfolios. And so we were one of the first ETF strategists. The biggest change of 2022 has clearly been interest rates are much higher now. This is pervasive across all asset classes, but it's particularly notable for shorter duration. Some of the least risky securities now have some of the highest return. And this is because markets, whether right or wrong, are expecting that the Fed is going to have to change and lower interest rates in the future. But the reality is that right now, short duration, low risk fixed income has as much return as things that have more risk. Now, what we do is we're always thinking about how does this affect the whole portfolio and how can you have a better, diversified, more efficient portfolio that's taking better advantage of what risk and return opportunities are out there. And so we're really thinking about how to shift some of the risk away from the riskier fixed income, capture the return of the less risky fixed income, and then be able to capture more return opportunities perhaps in some risky equity asset classes, but where there are significant return opportunities because of where the markets have been the last couple of years. What 2022 told us was it really reinforced the notion that we already understood, which is that you cannot be backward-looking even for things like risk, where historical data is somewhat valid. You have to really pay attention to what market information is going on and do have to have a very dynamic understanding of risk and how markets evolve. And then you need to build that into your portfolio to make sure that you are managing those risks. SPY is a great ETF. There's been a lot in the early days of ETFs that were really used for the liquidity. And I think one of the neat things that has evolved is, sure, they're still great for liquidity, but I think now building entire portfolios of ETFs where you really understand what the transparency and the risk characteristics of the ETFs and how to combine those into a portfolio that really can meet any wide range of investor goals in a really precise way, efficient way, tax efficient, optimized. All of these things together is what I love most about ETFs.